traders, Anthony here. All right, we have this trend here, a shift, well, a break of structure, a bullish break of structure. We've broken out of this bearish trend into this range up in here. Now, there's a few things about this. I'm bullish. My bias is bullish, but not at this level. And here's a couple of reasons why. And I'll try to explain this in simple terms for the benefit of those of you who might be learning to trade, like you're a beginner trader and you haven't quite grasped some concepts. I'll try to simplify this a little bit for your benefit. So we've got here a couple of things going on. To a degree, this is balanced trading, give or take, but it's fairly balanced, right? We get this range under here. And what's happening here is bigger players are accumulating. So the market will be manipulated. It'll work its way up. It'll draw in buyers, and stop losses will get set up under here, in the order book from these people buying. The market will hit those stops, and this is giving smart money the liquidity they need to pair their orders. In other words, they're working their orders so that they can do this. It rallies again here, and more stops get set up under here. Okay, traders are buying. There'll be a ton of people bullish, and what happens is that the market then moves back down into this level, and it hits these stops. Then accumulation, and then we get that. Retail traders jump in galore. Okay, they're piling in, they're chasing this. And the thing with this now is that the market's going to be looking for two things. It looks for liquidity, for one thing, in the form of sell stops resting under here. Right, under this range is a ton of stop loss liquidity, huge buildup of liquidity. It's been hit once, but if smart money is looking to buy, they need this liquidity under here. Now, I mean, it could push up a little bit further, but at some stage, it's going to come back down and hit this level. Let me just clear the drawings and I'll show you what else we've got on the chart. This thin candle, if we pick the candle to the left and the right and we pull that through, we have this bullish imbalance. Okay, for the benefit of those of you who are learning to trade, okay, this is why I'm kind of trying to explain this. It's looking for, one, for liquidity, and two, the market needs to rebalance. So at the moment, there's an imbalance here. Right? So this is a target for price to come back down and rebalance. And coupled with that, we have this huge build-up of liquidity under here in the form of sell stops underneath these traders. Right. And as I mentioned, I mean, this could push up a bit higher, but at some stage, it's going to look to hit this. Now, I don't want to be buying at that level. I'd be interested in buying if the market trades back down in around here, and we see it ranging again, and then, that's possibly the opportunity. So I'll just undo some of this, and we're looking at, I mean, you could speculate with a long position, so midway through the imbalance, something like that. Stop under the imbalance, or at least under these lows here. Right, that's an idea. That's speculation, and there's always risk in speculation. Now we're looking at these highs for a target. So there's a 2.9R if you were to do something like that. That's one idea, right? And again, it's speculation and there's risk involved. The other idea would be, you know, you're in front of the chart and you watch it, and when it trades down into your level, so mark up the level here. Let's just grab this value area here, pull that through. Let's just call that support. And this will be a potential target area. Well, I did mention the mid-range of this imbalance, okay? So let's just put that aside for now. And we'll mark this up here. I'm just going to pull this line through. All right, so I'm going to call this my buy zone, potential buy zone. Possible, okay, possible. P-O-S-S-I-B-L-A, okay, possible buy zone, right? Possible insofar as I don't want to speculate, but if we go down to the 30-minute chart, I'm going to be waiting for price to work its way down into this level. And let's say, for example, we get, I'll get my pencil and we'll draw it. Let's just say, you know, we get that. When it hits this level, I want to see it ranging like it is here. Then I want to see volatility kick in. Fake out, shake out, and then you want to see it push off with a vengeance. Displacement. This is a displacement here. Not my concepts. Okay, I've been studying ICT concepts for some time, and so these are ICT ideas, but yeah, my interpretation. So I'm looking for this to play out as such, and then what we look for then is the break of this range, breakout, retest, and possibly, you know, we get an opportunity to buy if the market works in our favor. But always look for the market to entice traders in to set up liquidity under. So buyers set up their stop losses under here, and then it trades down. It takes out these stops. Okay, stop run, and then you see it trending higher highs, higher lows. And then we look for an entry point above this range. And I want to see it occurring somewhere around here through this zone. Okay, I want to see that playing out. If this happens to head north and leave me behind, let it go. I don't want to get involved. I'm only interested in getting involved if it trades back down into this zone around here that I've described in the video. That's my take on Ethereum, guys, and I would love you to comment. Definitely comment below. And yeah, with that, I hope you have a great day. Safe trading. Mark this up. Set an alert down here. If it trades back down, let's get interested. Like, here we go. Look, there's an alert. Done. Add alert, notification, play sound, jump up and down, create. Good job. Okay, guys, with that, have a great day, and we'll see you in the next one.